Selamat malam Bapak dan Ibu, dan seluruh peserta webinar pada malam hari ini. Selamat datang pada webinar Philip Capital yang berjudul Bitcoin Investing with CME Futures, bersama dengan speaker spesial kita pada malam hari ini, Wan Zuhao. Perkenalkan, nama saya Krisel Erika, dan pada malam hari ini saya akan menjadi host pada webinar kali ini. Sebelum kita memulai webinar pada malam hari ini, izinkan saya untuk menginformasikan mengenai outline webinar yang akan dimulai dengan sesi pembukaan, dilanjutkan dengan pengenalan Philip Capital, dilanjutkan dengan pengenalan pembicara, yaitu ada Wan Zuhao, pemaparan materi oleh Wan Zuhao, sesi tanya-jawab, dan ditutup dengan sesi penutup. Seperti yang Bapak dan Ibu bisa lihat di layar, bahwa setelah pemaparan materi, kita akan memiliki sesi tanya-jawab atau Q&A session. Jadi, jika Bapak dan Ibu memiliki pertanyaan seputar topik webinar pada malam hari ini, seputar futures trading atau seputar Philip Futures atau Philip Capital, Philip Sekuritas Indonesia, dan Philip Asset Management, Bapak dan Ibu bisa mencantumkan pertanyaan di kolom live YouTube chat yang ada di layar Bapak dan Ibu. Sekali lagi, Bapak dan Ibu bisa mencantumkan pertanyaan di kolom chat YouTube yang terdapat di layar Bapak dan Ibu. Baik, saya akan mulai dengan pengenalan Philip Capital. Philip Capital sendiri merupakan gabungan perusahaan layanan finansial yang didirikan pada tahun 1975. Kini, Philip Capital telah tersebar di 15 negara dengan headquarter-nya yang berada di Singapura. 15 negara lainnya adalah Kambodia, Malaysia, Thailand, Vietnam, China, Hong Kong, Jepang, Australia, India, Turki, United Arab Emirates, UK, France, dan USA. Beberapa perusahaan finansial yang menjadi member dari Philip Capital yaitu Philip Futures yang terspesialisasi pada produk perdagangan berjangka atau futures trading, Philip Sekuritas Indonesia, dan juga Philip Asset Management. Selanjutnya, izinkan saya untuk menginformasikan profil dari speaker spesial kita pada malam hari ini, yaitu adalah Wan Zuhao. Wan Zuhao sendiri merupakan CTO Synergy Link Capital. Beliau terspesialisasi pada perdagangan makro global. Beliau mendalami berbagai instrumen, termasuk futures, option dalam ekuitas, komoditas, fixed income, forex, dan volatilitas. Ia memiliki latar belakang kuantitatif yang kuat dalam statistik dan pembelajaran mesin. Ia pun merancang dan mengembangkan sistem manajemen resiko komprehensif yang digunakan secara berkala oleh Synergy Link Capital. Baik, Bapak dan Ibu sekalian, without further ado, this is Wan Zuhao. Hello, Wan Zuhao.
Hi, good evening, everyone. Okay, let's get started. Thank you, everyone, for taking your Friday evening to join us and allowing me to share some of my thoughts about Bitcoin trading and investment with you. So throughout this session, if you have any questions, you can type in the chat room. If we have time at the end of the sharing, I'll be answering some of the questions. Please note that everything we talk about here is for information and hopefully entertainment purposes only. Please do your own research and fully understand the risk before putting any real money into the market. So before we get started, I would like to give everyone a little bit of introduction to my company and myself. Synergy Link Capital is a Singapore-based proprietary trading firm. So the founders were mostly head of the major investment banks' prop trading desks last time. So the members came from the era where trading was not even electronic yet. So they were literally trading on the exchange floor, exchanging hand signals to do trades, as you might have seen in some of the old Wall Street movies. So as a team, we trade all kinds of financial instruments and different kind of strategies. We like to do we especially like to do arbitrage strategies where we find asymmetrical risk and reward. So last year, the partners of Synergy Link Capital decided to incorporate a new fintech company called Inspirante Trading Solutions. So the purpose is to keep Synergy entirely focused on trading and let its fintech company Inspirante to expand the business into, for example, providing solutions, providing research and training programs such as this one. So currently we are actively engaged by exchanges and brokers to give these kind of webinars and events. So about myself, I came from a computer science background, and currently I'm the director and partner of both Synergy Link Capital and Inspirante Trading Solutions. I joined Synergy 6 years ago, and now I am managing Synergy's global macro portfolio. On Inspirante side, I do conduct training courses and webinars on various investment and trading related topics. And I'm also the author for this bi-weekly market research report on CME's website that you can find and subscribe for free. It's called Fresh from the Trading Room. It's meant for retail traders. So I publish it once every 2 weeks, talking about the market and some of the actionable trade ideas. Okay, so the agenda for today is, first of all, I'll introduce to you guys what is Bitcoin and why I think it matters. After that, we will be looking at some of the different vehicles for trading and investing in Bitcoin. And following that, we will be talking about trading the CME micro Bitcoin futures and subsequently the risk management in trading Bitcoin. And finally, we will have some time for the Q&A session. So before we try to understand what is Bitcoin or what people envision Bitcoin to be, it's helpful for us to take a look at what is fiat money. Some of you may have heard it before, but only outside, outside economics, people really don't talk about this much. So by definition, fiat money is the government-issued currency that is not backed by a physical commodity, such as gold or silver, but rather by the government that issued it. Only when in 1973, the Bretton Woods system collapsed and the US dollar broke its peg to gold, and it became a fiat currency. From then on, all modern paper currencies are fiat currencies. So many people would argue that moving into fiat money system is a sign of advancement of the human society and modern economics and financial market, as the currencies are no longer anchored by some barbaric rock, as they call gold now. To a certain extent, they are right. The new fiat system did help the government or the central banks to have much greater control over the economy by controlling how much money is printed and circulated in the system. So for example, when the economy is in recession or depression, central banks can increase their monetary supply to provide liquidity to the market and stimulate economic growth. On the other hand, when the economy is running too hot and in danger of rampant inflation, central banks can decrease the money supply in the system to cool down the economic activities. However, there are some issues with this fiat system, which we can see as becoming more and more severe since the 2008 Great Financial Crisis. The biggest problem with fiat system also comes from the same reason we've talked about just now. The central banks have the total control of how much money to print. So the unfortunate consequence of this is that whenever faced with crisis, be it financial crisis or health crisis like COVID last year, the first and most straightforward solution is to print money and support the financial market. So this kind of money printing leads to broad asset price inflation, as we will take a closer look later. You may wonder, what's wrong with asset price inflation? Isn't price going up good for us? provided if we participate in these assets. Actually, the real danger of such broad asset price inflation is that it didn't entirely come from societies increasing its productivity. Instead, it's largely due to excessive money circulating in the system. So it means our real purchasing power actually gets hurt when the price of everything goes up, yet our wage growth can hardly keep up. So now let's take a look at how money supply increased in these past 2 decades. This is a chart from the Federal Reserve website, the US Federal Reserve website. It shows the M1 money stock in the US since 1960s. So M1 is a measure of the total amount of cash and the most liquid instrument that can be easily converted to cash. So for nearly 30 years, M1 increased by roughly 0.8 trillion from 1973 to 2000. However, from 2000 to 2008, M1 increased by 0.4 trillion. And from 2008 to 2019, 2 years ago, M1 almost tripled to $4 trillion. And since the start of COVID, as you can see here, M1 absolutely exploded. It went up almost 5 times to 19 trillion. And this is a comparison between M2 money supply and the hourly wage in the United States. So M2 money supply is broader than M1. It includes M1 plus some short-term deposits. It is similar in many developed countries, actually, including Singapore. The ever-widening gap shows that the real purchasing power of our hard-earned wages are diminishing. So now, after seeing the massive increase in money supply in the past 2 decades, let's turn our attention to the balance sheet of the US Federal Reserve. So before the 2008 Great Financial Crisis, Federal Reserve balance sheet is roughly $1 trillion US. In the next 10 years to 2019, it increased by $3 trillion to $4 trillion. And that's after some tightening since 2018. However, in last year alone, it increased by more than 4 trillion. So Fed balance sheet doubled since the start of the COVID. All these may sound quite academic. So where can we actually observe the impact of such ballooning balance sheet? It's actually quite easy. Let's look at the stock market. So first, we want to figure out what is really driving the stock market up. So people usually believe that the stock market is the barometer of the fundamental economy, but I would like to argue otherwise. I think at this point, the central bank actually plays a very big role in driving up equity prices. So when we overlay the Federal Reserve balance sheet and the S&P 500 index, it gives us a pretty good idea what is really driving the market up. So they have shown some very stunning correlation here. So the blue line here is the Federal Reserve balance sheet. From 2010 till now, it increased 4 times from $2 trillion to $8 trillion. And the orange line is the S&P 500 index. It increased 5 times. So if we look at closely at this chart, for example, the green regions is when the Federal Reserve is expanding its balance sheet. We can see equity market usually enjoyed a very nice and smooth rally. Whereas the gray region or the red region are the cases when Federal Reserve stops expanding its balance sheet or even shrinks its balance sheet. We can see that the equity market stops going up and experience a much larger volatility. So given the response of the central banks, given how we see them when they face crisis, they always choose this path. I believe that balance sheet will continue expanding. Therefore, the financial asset price inflation will continue to go higher. Very fortunately, somebody foresaw the problem as early as in 2008. So Bitcoin was born in the rubbles of the great financial crisis. it was invented by some mysterious person or group of people who is by the pseudonym Satoshi Nakamoto. It's revolutionary in many ways, one of them being that Bitcoin is entirely decentralized and built on top of the blockchain technology. So in the very first block, the Genesis block, it carries this piece of text information. The times, January 3rd, 2009, Chancellor on brink of second bailout for banks. So it was actually taken from the title of this particular article on the newspaper on that day when UK was to bail out another bank for billions of taxpayers' dollars. So this is, I find, very historic and even heroic, like the phoenix born from the ashes of the great financial crisis. So without getting too deep into the technical aspects of Bitcoin, I want to focus on the comparison between Bitcoin, gold, and fiat currency, US dollar, for example. As at certain stage, they are all considered as some type of money or the store of value. So first and foremost, Bitcoin has the highest level of scarcity. The total supply of Bitcoin is mathematically defined to be 21 million coins. Nothing and no one can increase one extra coin after these 21 million coins. So in that regard, gold is also scarce. That is partly the reason it has been used as money and store of value for centuries. However, just imagine this. Imagine one day we discover another planet with plenty of gold element. Assume that it's economically viable to mine gold and bring it back to Earth. These will actually break the scarcity of gold because we suddenly have another huge supply of gold now. It's logical to think that the price of gold would subsequently drop. And that's not the case for Bitcoin. However, fiat currency, on the other hand, has the worst scarcity as compared to gold and Bitcoin. As we have explained earlier, central banks can simply print and create more money out of thin air. Bitcoin is also decentralized. There isn't a centralized governing body that is in charge of issuing new coins or verifying or clearing Bitcoin transactions. Bitcoin network is extremely secure because it's decentralized. There are thousands of nodes in the whole network that work very hard to help secure and verify every single transaction. The reward mechanism makes sure that all these actors, keeping the integrity of the entire network is in their best economic interest. Bitcoin is also easily transactable. It is particularly applicable in some countries where money remittance is inconvenient, tedious, slow, expensive, or even impossible. So unlike transferring the US dollar for the matter, any other fiat currency, in which both parties need to have a bank account, and the middleman, which is the banks, usually charge a hefty fee, especially on cross-border transactions. For Bitcoin, you can transfer to anyone with a valid Bitcoin wallet address anywhere in the world and anytime. And the transaction is almost instantaneous. It doesn't go through any middleman. So you pay a tiny little amount to the other participants who, as we said just now, work very hard to ensure the security and validity of the entire blockchain, including your own transaction. And last but not least, Bitcoin is highly divisible. The smallest unit of Bitcoin is called 1 Satoshi. It is 100 millionth of a Bitcoin. So at the current price, one set is only about 0.003 US dollars. So these are just some of the most important characteristics of Bitcoin and the major differences as compared to gold and fiat currency. If you're interested, I highly recommend you to read the original white paper of Bitcoin. You will be amazed at the elegancy of the solution. It was funny. It was funny that on July 12th, 2017, when Janet Yellen, then federal chair, was speaking to the House Financial Service Committee on TV, someone actually held up a buy Bitcoin sign during Yellen's testimony. It is very ironic, as we can see from the screenshot. Yellen was strongly opposing to audit the Fed. And by the way, at that time, Bitcoin was trading at around $2,400. And fast forward to today, there are already quite a large number of big institutions that publicly adopted Bitcoin. For example, Square moved 5% of its cash reserve to Bitcoin. MicroStrategy was among the first and loudest company to convert cash reserves to Bitcoin. Tesla also invested heavily in Bitcoin. At some point, it also accepted payments even in Bitcoin. Microsoft accepts payments by Bitcoin. PayPal accepts Bitcoin, Ether, Litecoin, and other cryptocurrencies on their platform. Shopify also accepts Bitcoin. And finally, the big financial institutions such as Goldman Sachs, JP Morgan, and Morgan Stanley, they all have open access to cryptocurrencies to their high net worth clients after years of criticizing Bitcoin. But I think the most exciting of all is that some of the biggest funds are actively working with the regulators to launch Bitcoin ETFs in the US. When that investment vehicle becomes available, everyone, including the biggest institutional money, such as the pension funds or even the sovereign funds, will be able to participate. Now, let's take a step back and try to answer the question, what is driving the price of Bitcoin up, therefore making institutions eager to participate? I think the answer is the network effect. So the network effect says that the value or utility a user derives from a good or service depends on the number of users of compatible products. Later, when you see some of the examples, I think you will be able to understand this easily. So the network effects are typically positive, resulting in each user deriving more value from a product as other users join the same network. And the adoption by an additional user can be broken into two effects. First one is an increase in the value to all other users. This is the total effect. And secondly is the enhancement of other non-users' motivation to use the network. This is called the marginal effect. So a typical example of network effect is, for example, telephone or internet or Facebook. Right? You can imagine that if on the entire world only you have telephone would have little use or little value to you. It's only when everyone has a telephone and you can call your friends, your relatives at any time, then this network becomes much, much more valuable. Same goes for the internet, same goes for the social media, Facebook, and same goes for Bitcoin. As we can see from this chart, there is a clear relationship between the Bitcoin market capitalization versus the number of addresses. So you can think of this as a visualization of the network effect on Bitcoin. And just last week, Goldman Sachs actually published this research paper on cryptocurrency valuations and the network size. We can see that not only Bitcoin, but many other notable cryptocurrencies, such as Ethereum, Ripple, Litecoin, and so on, they all fit this model very well. So Bitcoin is just the earliest and the largest by network size and market capitalization. So in summary, I believe these are the reasons that why we should invest in Bitcoin. First of all, because of the network effect and the fact that the entire digital asset space is still in very early stage, it offers a very, very attractive risk reward. Secondly, I believe it is a source of alpha to an investor's portfolio. With the traditional asset classes and extremely low interest rate environment, it's actually very hard now to find sources of alpha. A small proportion, such as 1%, 2%, or even 5% of the portfolio invested in cryptocurrency can meaningfully boost portfolio performance. thirdly, for small investors like us, I believe Bitcoin is a rare opportunity that we can front run the big institutions. Because this entire space is very new, regulations are moving very slowly. So it creates a barrier for big money to enter. And we, as a small investors, we are much more nimble than them. And finally, just like gold or the US Treasury, Bitcoin has the potential, in my opinion, to be the pristine collateral for the digital age. So what it means is that even though Bitcoin may not be designed for every task in the financial market, and eventually there will be new cryptocurrency inventions that do really well in certain aspects, for example, payments or loans or insurance and so on. Bitcoin will still continue to serve the purpose as the anchor and the foundation of the entire space. So for example, I believe this could be a possibility that in the future, other Bitcoins may no longer be quoted in US dollar terms, but it could be quoted in Bitcoin terms. And for now, unfortunately, we haven't reached there yet. It is still a very, very volatile asset, and there are still a lot of issues that need to be addressed, as we will see later. But I just don't think that Bitcoin will ever go away. So hope by now you understand why investors are excited about Bitcoin and the entire cryptocurrency and digital asset space. So how do investors like us actually participate in the investment? So there are different Bitcoin investment vehicles here. I'll go to details for each of them. First of all, the most secure way to invest in Bitcoin in the long run is the private wallet, because there is a saying in the crypto community, if it's not your keys, it's not your coins. What it means is that only when you have the private key to your Bitcoin or your digital wallet, you then own the digital asset. Without the private key, at most, you only have the access to the digital asset. So if we look at the fine print of Binance, the biggest crypto exchange in the world, if we look at the fine print of its on its website, Binance actually tells us you are not really in possession of your coins. Instead, the exchange holds and manages your fund on your behalf. Hence, the term custodial wallet. So how do we actually put Bitcoin in private wallet? There are two types of private wallet. You can have the hot wallet. Basically, it's a software running on your local PC when it is connected to the internet, for example, Exodus. Or there are even more secure way is to have a cold wallet. It's a hardware token that when you disconnect from your PC, it basically disconnect from the internet entirely. So no one can really touch your Bitcoin on that device. So Ledger is a very well-known cold wallet. Now, you can also trade Bitcoin on these crypto exchanges. So for example, this one is Binance. Do you have other places like Coinbase and so on? We look at the market depth on Binance, whether it's Bitcoin spot or Bitcoin futures. The market depth is very healthy and the bid-ask is very tight. That means the liquidity is good. It's good for trading and the slippages will be quite low. However, if you do not have enough confidence or have the access to these crypto exchanges, you can also consider a proper Bitcoin trust. So the most famous Bitcoin trust is the Grayscale Bitcoin Trust, or GBTC. It was, the inception date was as early as 2013. And as of now, the asset under management is about 21 billion US dollars. So all investors can buy or sell the shares of this trust, just like any other US securities. However, because of the structure of the trust, its shares can't be easily created. Neither is there an active redemption program, unlike the most common ETFs. And because of the fact that for a long time, this is the only available solution for many big investors, there were persistent premium to NAV or net asset value simply caused by the demand and supply imbalance. So for a long investor, you not only have to pay a high management fee of 2%, but you're also buying the shares at premium. This chart shows the grayscale premium to NAV. We can see that before February of this year, it was always trading at a premium. And only after February, it now trades at a discount. So Citron Research actually published a paper back in 2017 called to short this GBTC. The reason was that the NAV premium went to as high as 70%. So it was calculated by taking the GBTC Trust Bitcoin holdings valued at the spot Bitcoin price versus the GBTC market cap. But as I mentioned before, regulators have been moving very slowly, and for a long time, GBTC was really the only option for many investors. However, the good news is that GBTC is fully aware of this issue, and they commit themselves to eventually converting into an open-ended ETF. Speaking of Bitcoin ETF, actually there is a Bitcoin ETF that is launched only this year, but it was in Canada. So Purpose Bitcoin ETF is the world's first Bitcoin ETF. It's only the AUM is only 860 million Canadian dollars now, but it's growing very fast, and the management fee is only 1%, much better than the GBTC. Other than directly investing in Bitcoin or the ETFs, investors can also participate by investing in the public companies that have exposures or businesses in digital asset space. For example, MicroStrategy, Tesla, or Galaxy Digital, or Coinbase, and so on. However, please be very careful about investing in these companies because other factors come into play, such as the business model, the financial conditions, and so on. You need to evaluate them individually, and to me, it's no longer a pure Bitcoin play. Personally, the safest and easiest way for me and my firm to trade Bitcoin is actually via CME's Bitcoin Futures. CME has Bitcoin and micro Bitcoin futures, whose contract size are 5 coins and 0.1 coin, respectively. So both of them are financially settled, and the micro contract, although only launched recently, is showing very good trading volume and open interest. So MBT is, I find, very suitable for new and small investors because 0.1 coin at today's price is only about 3K US dollars notionally. So this is another chart from CME showing that the daily volume and open interest are steadily increasing, suggesting that more market participants are coming into this market. When comparing to the major crypto exchanges on Bitcoin futures open interest, CME currently ranks number 4. So these are what we have talked about are the different vehicles for investors to trade or invest Bitcoin. Now let's take a look at the risks. In my opinion, there are 4 major categories of risks involved in Bitcoin or any other cryptocurrency trading. I will explain each here. First and foremost, as the entire space is very new, regulators were not able to keep up with how fast things are moving. So since day one, many people have been saying that there's no way government is going to allow a decentralized money system to exist, right? Because government needs to have control over money. I don't disagree. However, I view the slowness of the regulators not as a negative risk, but just as uncertainty. And I think that we need to embrace the regulatory uncertainty because even though there are risks, that is also precisely where the upside potential comes from. We are actually betting on the digitization of the future financial system. although nobody knows for sure how it's going to be 10 years down the road, but we can certainly take a calculated bet that digital assets and cryptocurrencies will not disappear, but will become more mainstream in one form or another. As I mentioned before, the regulatory uncertainty creates the barrier for big institutional money, such as pension funds and sovereign funds. And now we have the opportunity to position ourselves before they do. The next risk is 100% a negative risk that we should try our best to avoid in order to safeguard our investment. So there are countless cases where crypto exchanges got hacked, lost money, or the funders just took the money and ran away. After all, these exchanges are under-regulated, and remember, your coins on these exchanges don't belong to you. Even the biggest exchanges are not entirely risk-free. Therefore, my advice is to separate your short-term trading from your long-term investment. So for long-term investment, if you truly believe that the future of Bitcoin and other cryptocurrencies, just get a cold wallet and store it in a safe place, and never forget the password. This way, no one can really take the digital assets away from you. On the other hand, for short-term trading, if you want to trade Bitcoin, I would highly recommend CME's Bitcoin Futures. CME is one of the largest futures and options exchange in the whole world. It is highly regulated, and the counterparty risk is negligible as compared to those online crypto exchanges. If you really want to trade other coins that you have to use, one of the crypto exchanges, I would suggest only putting the money that you can afford to lose, because it's not an immaterial risk that the exchanges may go bust and you will lose all your digital assets on it. The stablecoin risk is something I consider to be the biggest challenge faced by crypto market today. If you look closely at many crypto platforms, you may find that the coins are actually, even the Bitcoins are quoted in, not in USD, but in USDT. So USDT is called Tether. It's supposed to be pegged to US dollar 1-to-1. That's why it's called the stablecoin. Of course, there are other stable coins such as USDC and so on, but I want to focus on Tether here. So there have been a lot of controversies around Tether, especially on whether it is really backed by cash or cash equivalent, as they claim. Due to time constraints, I won't go to the details and technicalities and the history of this issue. I highly recommend that you listen to this recent podcast by Grant Williams and his report on Tether. It's available to public on his website. So even the Federal Reserve itself has published a paper in June talking about the potential risk to the financial stability posed by stable coins like Tether. In late February, the New York Attorney General's office settled with Bitfinex and Tether on charges relating to financial mismanagement. So in the statement, the New York Attorney General said that Bitfinex and Tether recklessly and unlawfully cover up massive financial losses to keep their scheme going and protect their bottom lines. Tether's claims that its virtual currency was fully backed by US dollar at all times was a lie. So allow me to oversimplify this for you. If it turns out that Tether is a gigantic fraud and not in fact pegged to USD 1-to-1, it will, in my opinion, absolutely cause havoc to the entire cryptocurrency and digital asset space. However, knowing that the problem is it's not something new, there are doubts about Tether surfacing a few years ago. And at this point, is the market already priced in this information, or is the market just choose not to see it? Honestly, I do not have an answer for that, but I want to be very, very careful and mindful of this risk. And lastly, many people mention this. There is the so-called weekend risk for trading Bitcoin, especially if we were to trade the CME Bitcoin Futures. Because Bitcoin or any other cryptocurrency trades 24/7, whereas most other traditional financial instruments like the CME Futures do not trade on weekends. But to me, I don't think this is a material risk at all. I don't think it's a risk that's unique to Bitcoin. It actually exists for all other commodities if you think about it. When the futures market is closed, it doesn't mean the actual physical market is not moving at all, right? Like the oil market, like the agriculture, it happens all the time, even when the futures market is closed. The key thing here is to properly size your positions and control your risks, just like trading any other product. So talking about position sizing, I want to show you this very rough sketch of mine on different asset classes, volatility, and potential returns. Note that at the bottom left corner is cash. It can be considered as risk-free, but because of the low interest rate plus inflation going higher, the real rate is actually negative for holding cash as the purchasing power gets eroded by inflation. So moving along the curve, you will have the money market, you will have the safe government bond, and then the corporate bond, then the index ETFs, developed markets, and so on. And the private equities and venture capitalists will be at the far right hand side. Where would Bitcoin go? Bitcoin, I believe, is undoubtedly at the top right corner. It has the highest risk and volatility, but it also has the highest potential return. So when we are constructing a portfolio with different assets, it's a good idea to size the position according to volatility, right? So for example, the higher the vol, the smaller the position. So it's a good idea, I think, to put, say, 5% of your net portfolio into Bitcoin. But it's a terrible idea to put more than 50% or even taking leverage to trade these super high vol assets. So my suggestion is never trade Bitcoin or never trade any cryptocurrency with leverage. Lastly, after what I have shared in the past 40-50 minutes, I hope that you can see my stance on Bitcoin. I am a trader myself. I can see the potential of Bitcoin, of cryptocurrency, and of the digital age. And I believe there is a high probability that this whole thing will work out. However, I'm not a diehard Bitcoin maximalist who thinks Bitcoin is flawless and solves every problem we have. And everyone who argues otherwise is just wrong. I see a lot of this kind of mentality online, and I find it very toxic. So I can see the problems, the potential problems of Bitcoin. Some could even be existential problems, such as Tether. But as a trader, I see opportunities. If you are not 100% convinced one way or another, why not just follow the trend? The trend is always your friend. So this chart is the backtesting of a very simple trend following strategy. It works wonderfully on Bitcoin and other cryptocurrencies. So you can see the marked entry and exit points. So it got me into Bitcoin when the price was just above 10K last year and got out above 50K. So I fortunately I avoided this entire drawdown of Bitcoin of the past few months. Now I'm just waiting for the next signal to be generated. So as you can see from the green region, the trend following strategy can easily capture these big trends. That's more than enough to compensate for the interim whipsaws. And this, I believe, the crypto market is indeed a trend follower's dreamland. Okay, that concludes my sharing. I'll hand the time back to the host. Thank you, everyone.
All right. All right. Thank you, Mr. Wan Zuhao, for a lovely and very informative material that you just shared with us. Baik, Bapak dan Ibu, slide materi pada malam hari ini dari Mr. Wan Zuhao telah berakhir. Nah, apabila Bapak dan Ibu ingin mengetahui lebih lanjut, informasi lebih lanjut mengenai Bitcoin, Bapak dan Ibu bisa mengikuti kelas trading lanjutan yang akan diadakan pada hari Selasa, minggu depan di tanggal 27 Juli 2021 pada jam 2 siang yang akan berjudul Investasi Bitcoin bersama CME Futures. Sekali lagi, jika Bapak dan Ibu ingin mengetahui informasi lebih lanjut mengenai Bitcoin, akan diadakan kelas trading lanjutan pada hari Selasa, tanggal 27 Juli, jam 2 siang, dan kita di sana akan membahas mengenai ringkasan dari materi pada malam hari ini dalam bahasa Indonesia, detail produk, dan juga untuk profit dan juga loss perhitungannya. Baik, kita akan masuk ke dalam sesi selanjutnya, yaitu adalah sesi tanya-jawab. Oke, baik. Alright, so apparently our attendees today are very interactive and we do have several questions asked. I'm gonna read it to you, all right?
Sure. Is it the one that in the chat room I can see
Yes,
there are 4 questions?
You could also,
Wonderful
yes, you could
question.
see as well.
Okay, how about I go through them one by one?
Yes, sure. I'm gonna help you go through it one by one.
Okay.
Alright. Untuk pertanyaan pertama, the question number 1. Is it important to know the fundamental analysis of every single cryptocurrency?
Okay, that's a wonderful question. That is okay. Let me put it this way: there are 2 types of investment approach that you can do. Okay, cryptocurrency is no different from in terms of investing. Cryptocurrency is no different from the traditional investing. Okay, so imagine yourself to be at before the dot-com bubble, before at the very early stage of the internet age. Okay. One way you could choose to do is to try to understand every piece of new technology, which is very challenging, I must say. And by doing that, you may be able to pick the few unicorns like Google, Apple, Facebook, and so on. And that eventually is going to be a multi-bagger for you, right? No problem. That's one way to do it. But the other way to do it is if you think that, okay, this internet thing is going to be a trend and it's going to be super big. But for now, I do not understand. I do not fully understand every company or what they are doing. Okay. But I think eventually some good companies will come out from this. So what you can do is you invest, you diversify your investment into a basket of companies, right? And some will unfortunately die, but some will become the Apples, the Googles, the Facebooks of today, right? So same as cryptocurrency, it's even more challenging to understand the technology and all the fundamentals behind each cryptocurrency, because honestly, everyone, if you want, you can create your own cryptocurrency. So there are literally thousands of cryptocurrencies in the market. There's no way, I think there's no way that you can try to understand all of it, right? So that's my point. My point is, why not just diversify a little bit? If you find a few cryptos that you find interesting, you can read a little bit into it, but don't try to spend all your time to predict whether this is going to be the next multi-bagger or not. How about just diversify, have a basket of cryptocurrencies? Of course, Bitcoin should be one of it because it's the, as we say, the pristine collateral of the digital age, right? So without knowing too much into the fundamentals, of course, if you're interested or if you have the technical capabilities to do so, go ahead by all means. But if you don't have that, that's okay. Stick to your principles, stick to your trading principles, stick to your risk management principles, stick to your position sizing principles, right? So if you can position size it well, if you can manage it, risk manage it well, just enjoy, just ride the trend. That's my advice. You don't have to understand every bit of it. Just ride the trend.
All right, to the next question.
Yep.
The next question, do you think is it too risky if the Bitcoin price is determined by only some people like Elon Musk?
Well, Elon Musk definitely has some quite a substantial influence, not only in Bitcoin, but in many other things. I think that's also a phenomenon for this for this whole space at the, I would say, still at its infant stage, right? It's still very, very early. That's why even assets like Bitcoin can be so easily affected by Elon Musk. So yes, it is risky. And even talking about the Tether, that is also, I would say, similar kind of risk. Elon Musk is a public figure that whatever he tweets can influence the price of Bitcoin. But Tether is even more, I think that the influence is even bigger, because if Tether can print out of nothing, right? If it's not pegged by USD, then it's logical to assume that a lot of the Bitcoin price appreciation was caused by this printing of Tether. So all these are risks. All these are risks, and the whole point of having this, the whole point of Bitcoin having the potential to be something big is that at the moment the risk is in the market, and we don't have a clear, it's not all clear yet, right? So we should be very mindful, very, very mindful of the risk. And how do we deal with the risk? We position size, we manage risk very well. We manage our position risk very well. And if we can do that, right? If we can do that, all those Elon Musk, Tether, and all that becomes less important, becomes more like a noise, right? Because if the trend is up, you follow the trend. If the trend starts to turn down, you get out of the position. Simple, right?
Okay, nice. Go to the next question. Question number 3. Which do you think is better to trade crypto, spot or futures, and which has the greater trading volume?
Okay. I would advise against trading. Okay, so my first preference is definitely to trade the Bitcoin future on CME. Okay, Bitcoin futures on CME, because of the few advantages that we talked about just now. The most important one is you don't have any counterparty risk. You can be rest assured, right? But other than that, trading the spot is fine, because I believe if you were to trade the spot, at least you don't really have. Okay, let me put it this way: do not trade cryptocurrency with leverage. Okay, there are many crypto exchanges that allows you to trade 5 times, 10 times, 20 times, or even 100 times leverage. This is a no-no. I mean, speaking from a professional trader's perspective, Bitcoin volatility is easily over 100%, and you just shouldn't trade Bitcoin with leverage. So if you just trade the spot unlevered, right, that's still fine. That's still fine, but don't touch leverage. That's my advice. Another advantage of trading spot is that trading spot gives you more access to different coins, right? So for example, right now, CME only has Bitcoin and Ether contract. Whereas if you were to trade other cryptocurrencies like Ripple, like Bitcoin Cash, like Litecoin and other things, you will have to use one of the spot market, right? But for me personally, if I were to trade Bitcoin, I would definitely go for the CME futures. Yeah.
All right. The next question is, will Bitcoin be volatile in the following years, or will lose its momentum?
I think it will continue to be volatile. I mean, the audience, if you are interested, you can take a look at there is a pricing model for Bitcoin called the stock to flow model. So this model basically based on the halving of Bitcoin. So basically Bitcoin, you can think of it as the difficulties to get a coin or the supply will reduce by half every 4 years, right? So progressively, it will be harder and harder for the miners to get Bitcoin. So this model so far has been very, very accurate in predicting long-term Bitcoin prices. Right? So in that regard, we just had the halving last May, right? And next in 3.5 years time, or in 3 years time, there will be another halving. Right? So I think the Bitcoin price is going to be volatile, and given current regulatory side, right? U.S. Many countries actually the governments and the central banks are paying more and more attention to this cryptocurrency space. So you can anticipate there will be regulations, both positive and negative, all kinds of things will come out as Bitcoin gets bigger, or as the cryptocurrency space get bigger and bigger. So personally, I think it's going to continue to be volatile for at least a couple more years.
All right. The next question is, what is to consider before trading cryptocurrency?
What is to consider before trading cryptocurrency? I would say the same consideration. Okay, let's define. Let's narrow it down to trading crypto. Okay, let's say we are not talking about investing in crypto. If it's investing in crypto, try to understand the fundamentals, why these cryptocurrencies were created, what problems they are trying to solve, and so on. And you just put in some investment that you think it's reasonable and for long-term investment. But if we're talking about what to consider before trading crypto, it will be similar to trading any asset classes, whether it's equities or forex or commodities. Right. First of all, you need to have a strategy. You need to hopefully you backtest your strategy. You have your confidence in your strategy, and strategy is only a part of it. More importantly is your risk management, your money management, and how you manage your psychology, right? You don't FOMO, you stick to your framework, you stick to your trading rules. So it's the same as trading any other thing. It's just to put it this way, if you were just to trade Bitcoin is simply just another ticker, right? It has a price and it's a tradable price. It's just this thing is called Bitcoin, that thing is called S&P, right? So if you're talking about pure trading, it's the same for any other trading strategy or trading systems. Get your systems, get your back testing, get your risk management, and get your psychology. Yeah.
On to the next question. Some futures people like Bill Gates doesn't even recommend Bitcoin for long term. Can you explain your point of view on this?
Well, this is, as I said, the cryptocurrency, the entire space is something new, entirely new to human beings, right? For thousands of years, we never had anything like this. So it's entirely understandable that some people would view it as the next big thing, right? Some people would view it as revolutionary, but some would be very skeptical about it. I think that's what makes a market, isn't it? Because if everyone is a Bitcoin bull, then there would be no market. Everyone would be the buyer. No one would be the seller. No one would be on the other side of the market, right? So, of course, you should listen to some of the people, especially if you believe they are, futuristic, as you mentioned it. For example, Bill Gates or Warren Buffett. All these are legends. It pays to understand their rationale, right? So you're not just taking their conclusion for it. What is more important is to understand where they are coming from, right? What reasons they have for, being skeptical about Bitcoin. Then you can make a much more independent and sound judgment for yourself, right? So now you have both sides of the story. You have the Bitcoin bulls. They're talking about the digitization of the entire financial market. On the other hand, you also have the Bitcoin critics, right? They're talking about this could be just a scam. It could be the tulip bubble, right? So understand both sides of the stories. Don't try to create an echo chamber, right? Meaning you only listen to people who agree with your opinion. That is dangerous in investing and trading, right? So my suggestion is follow more people, understand their point of view, and make your own decision. Okay, next.
Okay, to the next question. How can I trade on CME through Info Futures Indonesia or what? I'm going to answer this one. Baik, Bapak dan Ibu, jika Bapak dan Ibu tertarik untuk melakukan trading pada CME Bitcoin, Bapak dan Ibu bisa membuka akun dan melakukan trading di salah satu perusahaan Phillip Capital yang bernama Phillip Futures Indonesia. Phillip Futures Indonesia sendiri terspesialisasi pada produk perdagangan berjangka atau futures trading. Untuk pembukaan akunnya dibutuhkan minimum 500 US dollar. Namun, untuk melakukan trading, margin setiap produk akan berbeda-beda. Nah, jika Bapak dan Ibu ingin mengetahui lebih lanjut informasinya mengenai detail produk CME Bitcoin dan juga ingin melakukan pembukaan akun, Bapak dan Ibu bisa langsung mengikuti kelas trading lanjutan minggu depan di hari Selasa yang berjudul Investasi Bitcoin bersama CME Futures. Nah, nanti setelah webinar ini kami akan mengirimkan pesan kepada WhatsApp dan juga melalui email Bapak dan Ibu mengenai link registrasi kelas trading lanjutan. Baik, to the next question. How to put stop loss when trading future Bitcoin because of the widespread? Please give us the tip.
Okay, if we're talking about the CME, especially the micro Bitcoin, the MBT futures, the spread is actually pretty good. As in the bid-ask is only a few ticks wide, and more importantly, regarding how to set stop loss. Okay, you need to understand this. Bitcoin is a very, very volatile asset. So there's no point setting a stop loss that is very near, right? Can easily get triggered just by a normal random market swing. Right. So one of the technical indicators, one of them very commonly used technical indicator, the average true range, right? The ATRs. At least at the as a start, you can use the ATR to judge roughly how far you should be setting your stop loss. All right. So if you set the stop loss that every time it get easily triggered just because the market swing a little bit, that means the stop loss is too near. Right. You are being whipsawed by the market. And you might say that, okay, if I set the stop loss too far, does it mean my potential losses are bigger? Actually, no. Once you set the stop loss to be wider, right, subsequently your position sizing should be smaller. So this is exactly the point that I mentioned about volatility versus position sizing. Right. So the higher the volatility, the smaller your position should be. So if I were to do it, let's say with only 1 or 2 lots of the MBT contract, I can afford to set my stop loss to be at least, say $1,000 wide, right? Because $1,000 wide, at least I know that during normal market swing, I won't be easily shaken out. I'll be only out when the market really had a big move. Yeah, so that's my suggestion. Trade small, have a reasonable stop loss. Don't set it too close, otherwise you'll just get whipsawed all day by the market.
All right, to the last question. This is the last question. Is there any chance that Bitcoin and other coins price going up again?
I wish I could say for sure, but yeah, there's definitely a chance, and there is also a possibility that is going to crash, because of the tether issue that I mentioned just now. It's still pending, and more regulators have been drawn to start scrutinizing these issues. So potentially, it could be a negative catalyst for Bitcoin. So yeah, it could go up, it could go down. I mean, nobody knows for sure. That's why if you are not 100% believer in this, I mean, if you are 100% convinced and believe in Bitcoin, it shouldn't matter to you if it goes down temporarily, right? Because you just buy more at a lower price. And those are for the real diehard Bitcoin fans who want to hold it for the longer term. But for us traders, we understand the possibility that it could go up. It could shoot back to 50,000, 60,000, or it could drop to 20,000 or even 10,000 because of this news. Because when markets suddenly, for example, realize, oh, Tether is a fraud and it's not pegged to the US dollar, we acknowledge that all these are possibilities. Therefore, it is very important for us to always be prepared for both scenarios, right? So in terms of your position sizing, in terms of your risk management and all that, you should always have a game plan. Always have a plan. Trade the plan, right? Plan the trade.
All right, that's for the last question for today. Thank you, Mr. Wan Zuhao, for answering all the questions amazingly.
Thank you, everyone. That's
all
all these are very, very wonderful questions. I really appreciate that.
Yes, very enthusiastic. Alright, kita akan masuk ke sesi selanjutnya, yaitu adalah sesi penutup. Nah, jika Bapak dan Ibu tertarik untuk melakukan trading di CME Bitcoin Futures, Bapak dan Ibu bisa melakukan trading dan membuka akun di Philip Futures, yaitu adalah salah satu perusahaan finansial dari Philip Capital. Why trade with Philip Futures? Yang pertama ada open today dan trade next day. Jadi adanya proses online account opening yang sangat mudah dan sangat user friendly buat Bapak dan Ibu. Adanya more than 100 exchange traded products termasuk CME Bitcoin Futures. Web-based trading platform tanpa Bapak dan Ibu harus mendownload atau mengunduh. Bapak dan Ibu bisa langsung melakukan trading secara web-based atau secara online. Dan yang terakhir adalah same day fund withdrawal. Proses withdrawal yang sangat mudah dan sangat cepat. Nah, jika Bapak dan Ibu masih ingin bertanya-tanya atau membutuhkan adanya personal guidance, Bapak dan Ibu bisa menghubungi Philip Futures untuk melakukan adanya one-to-one coaching yang kita akan diadakan ataupun akan diselenggarakan oleh wakil pialang berjangka dari Philip Futures sendiri, dan online one-to-one coaching ini akan dilakukan secara free untuk mengguide Bapak dan Ibu untuk melakukan trading, membicarakan mengenai futures trading, begitu juga dengan Philip Futures, segala margin, cara pembukaan akun, dan sebagainya. Nah, jika Bapak dan Ibu masih memiliki pertanyaan seputar materi pada malam hari ini, seputar Philip Futures atau Philip Capital dan juga Futures Trading, nah Bapak dan Ibu bisa mengikuti kelas trading lanjutan di minggu depan hari Selasa, tanggal 27 Juli jam 2 siang. Setelah webinar ini, kami akan mengirimkan pesan kepada WhatsApp dan juga email Bapak dan Ibu untuk memberikan adanya link registrasi untuk kelas trading lanjutan. Nah, jika Bapak dan Ibu ingin mengetahui informasi lebih lanjut atau pertanyaan lebih lanjut, Bapak dan Ibu bisa tanya di situ. Alright, thank you Mr. Wan Zuhao for a very wonderful presentation today and very informative for all the attendees today.
Thank you very much.
Terima kasih juga, thank you. Terima kasih juga Bapak dan Ibu yang telah menghadiri webinar ini dari awal hingga akhir. Semoga webinar ini memberikan informasi yang tepat bagi Bapak dan Ibu, dan jangan lupa untuk menghadiri kelas trading lanjutan minggu depan. Sekali lagi, thank you Mr. Wan Zuhao, terima kasih Bapak dan Ibu, dan sampai bertemu pada kesempatan selanjutnya. Thank you, bye.
Thank you, bye-bye.